Welcome to today's Silver Log. It is the 9th of November 2010. And I'd like to start this video off by announcing that I was lucky and fortunate enough to be a winner in the Mike Maloney Silver giveaway. And thus I'll be receiving 20 ounces of Bullion Silver Eagles. Thank you very much, Mike. And I'll be now giving away 7 Canadian ounces, which are Maple Leafs. More details over the next week or so. And earlier today I made a video about the volatility increasing, and that was definitely the case today as we've seen the silver market go from 29 and a third, retracing about almost $3 an ounce within the day. Very, very big corrections as it managed to go below the 27 handle to about 26 and a half. We'll show the intraday chart in just a moment's time. And there was some massive volume within today's market. The SLV shares traded at over 150 million shares traded today. That is by far a major increase from any of these previous volume days. And some might say when you have this big volume, which is from a move higher that just sells off rapidly and aggressively, that it will be an intermediate term top. Intermediate term means for a few weeks, maybe even a couple of months, where the price would change to a bearish sentiment, testing 24, 22, and maybe even 20 an ounce. Those people might be right. It could very easily be that case. But for all we know, there could easily be higher volume that gets us 200, 300, 400 million shares that can drive that market above that 32 handle that I've been talking about for quite some time. Still uncertain about what this volume is going to bring, but it should bring either or to the equation. What I would not expect is a time correction, although that could possibly happen also. And within these candle charts, when the Fed spoke last week, that brought the silver price down to 24. It proceeded higher, had another update. So there really wasn't any buying dips until, of course, the buying dip that occurred today within the market. Now, as far as the intraday time is concerned, the moves that we've seen today this is a chart that you should see in a week's time frame, and it's probably not going to be long. Within the next 6 to 8 months, I'll be saying that this intraday chart will be something you should normally see on a yearly basis. But when you go from the 28 and a half handle up to 29 and a third down to 26 and a half, that's a pretty volatile session. This line here is the daily volume weighted average price for the day. And when it's rising, buyers are in control. Selling, the sellers are in control. And throughout the day, it was support on 3 different occasions. Was unable to find support at this level, and it was bye-bye for the rest of the day. The blue line represents the 200, so it really didn't do too much. It didn't find support and found resistance at that level. Started to decline, and that could be an area for intraday resistance for tomorrow. And the red line is the 50-day moving average, which it was battling with in the earlier morning session. When it got above it here, it stayed above it for a short period, broke below. When it had its play around with the 28 level, then it neutralized within its field, and then it couldn't hold it right in here. Because what's big about this neutralization period at the 28 level is its resistance. It finds a higher low, it gets above it, which is great. But what you need to do when it's declining is you need to come back to that level, find some support, and then lift higher as it's flattening out to proceed it higher. We can see how this moving average started to flatten and rise higher, but it didn't find support on this section here. And because it didn't find support, it sold off another $1.50 or so. And we can see this bottom here is 26.50. It actually even pierced even a little bit below it, I think. Anyway, the 26.50 handle is right where the 50 or the 5-day moving average happens to be, this green level line. It came right down to this level. It is now currently at $27 per ounce. And when we take a look at what we see on this chart, we have a rising 5-day moving average. So therefore, this sell-off is guilty until proven innocent. You can say all you want about volume, but it is price that pays. And as long as the 5-day moving average is rising, it is still a bullish sentiment. We're still above this trend line. So the only key support level that it really managed to take out was this volume weighted average price since the Federal Reserve minutes. Since that bottom, there will be another VWAP that I'll add from this top in here, but I'll wait till we have some rallies before I put that VWAP into place. So the price is still on a bullish sentiment. If you are looking for a buying opportunity, this would be one of them. Now, as far as Fibonacci is concerned, we can take the $24 breakout level from the Federal Reserve minutes last week, and today's high at roughly 29 1/3, and the 76.4 was at 27.99. That's where the 50-day moving or the 50-minute moving average was tested today, as I was showing just a few minutes ago. So that was support. Then you have 27.18, and there really wasn't much support at the 27.18 level. Let me just check back on the intraday chart. It was just for a brief period that that level was support. So that's a little concerning, to say the least, that the 27.18 was not able to hold. Now, you can make what you will about the 50%. I'm not a big fan of that. But the 38.2 is now at about 26. The exponential is 25.92. The linear is 26.05. So we'll make it an even 26 as an area for support. You also have this uptrend line, which is now going to be higher than 26 very soon. You have this 10-day moving average, 20-day moving average, a rising volume weighted average since the August breakout, and you have a rising 50-day moving average. So a lot of bullish sentiments remain within the market, to the point where even though we had a 7-8% fall from its high, it still kept the trend higher by using the 5-day moving average as the indicator for the intermediate term trend. Now, what's going to happen from here? We'll have to wait and see what goes on within the market. Now, as far as newer Fibonacci levels, we can take a look at the, to try to remember what the bottom was here. There was, we'll say 2650. That's a nice even number too. So as far as 2650 is concerned, you can put in a 23.6 at 27.15. So on the way higher, if we can keep 26.50 as a bottom, this would be a key level, as well as 27.5, which would be roughly somewhere around here. That will be some big resistance. And then again, if they can manage to take that and hold that level, then the next one would work out to about the 28.25 level, which is where we have this little segment here. If it is unable to hold this level, do something like this, and then start to fall lower, then that's when we'll get towards these support levels that the market has. Overall, like I say, still extremely bullish. And when I seen what happened today, I was actually loving seeing this happen. I made a video back in February of this year saying how much I love the pullback down to 1465. And what I said then was, because of these big moves, I know silver is going to have them happen again towards the upside. I'm saying the same thing again here, because by having these types of moves below here makes it very plausible, I don't know if that's a word, but makes the probability odds much greater that we can have the $5 up day in one day because you need extreme volatility for those kinds of days to happen. Now, if this thing completely starts in and starts collapsing, then we know that we have opportunities for cheaper silver, sort of like what occurred back in 2008 when the silver market broke a key 16 level of support and then lost half its value. I'm not going to say it's going to lose half its value down to 13 or 14, but if the market does continue to head lower from here, that's changing nothing within the fundamental analysis. And that's why if you're looking for another buying opportunity, this is stage one or your first level again. And if it goes down below the 26, 25 level, there's your next level. Take care, everyone.